Hello guys, in this video I will try just to give you an idea about gap ups and gap down of Facebook, so stay tuned. Hello guys, my name is Abdelkarim. I am your trainer and coach. So for this video I will try just to show you Facebook gap up and gap down, just to understand what's going on, what makes this gap up and gap down in a stock like Facebook, and is it when it is a gap down, does it mean that Facebook is losing money? And when there is a gap up, does it mean that Facebook is making more money? Okay, so let's see the chart. As you can see here, the chart, you can see a lot of gap up and gap down. Some they are small, some they are big. Like here we have a gap down here, we have another gap down here, we have a gap up here, and then we have the largest gap down we see last year in 25 July and 26 on Thursday. This is one of the biggest hit for Facebook. Now, from that time, Facebook was following the market. It means even the market, the general market, was going down. So it was going down, going down, going down. We have here a small gap up, but it's just small. And then, as you might know, here is the time where I showed you that almost all the stocks have the same thing, which is this one, which is 26 December. 26 December, everything changed in the market, and Facebook is going up. We have a gap up here, and we have a gap up here. Now, so if you see the gap up, one here and second here, and you see a gap down before, okay, gap. So no one knows before the gap up happened, okay, or before the gap down happened. You will never know. So here is the reason. A lot of people try to predict gap ups or gap downs. You should never predict. Now, why is that? Because the news comes with information. Now, if the analysts, they put a number of EPS, which is earning per share. For example, they say this or last quarter, Facebook will make $1.50 for each share owned. But understand this, it's not dividend. This is what really Facebook has made in real, according to the shares. But this is not for you. This is for the guys who own the company, and so it's not for you. So it is just, it's real money, but it is not for us. It means if you have a gap up, it doesn't mean they will give you $1.50 for each share you bought. They don't. Because this is not a dividend. Okay? It is a real money that the company has made. Now, if the company, it announces, let's say after the market close, or before the market close, it depends, wherever the company says, if the guy says that the EPS is more than, for example, $1.50, let's say he said $3, it creates a surprise. So day traders, hedge funds, all the people in the world, because don't understand that it is only in America that we have 10 million people are looking at Facebook. No, It could be 20 million, 30 million all over the world, because a lot of people, traders, they are here trading with us. It's very easy. You go just, you are living in England, you make a broker here, you apply for a broker, you put your money and begin your trade. So it doesn't mean that we are only alone in America that we are doing this. So all the people, when they hear the news that it is better, they just buy long. But understand that sometimes big guys think that it is a bad information or there are something bad. They think otherwise. That's why we have surprises, but sometimes it doesn't do what the earnings is for. So here, understand that there is no sure thing. But in majority of cases, when Facebook is doing better than the analysts say, okay, so we will have a gap up. Now, the opposite happens when the company just announces less than what the analysts say, and then you will see that the stock is going down. It doesn't mean that when Facebook is making $1.50 less or more, it means that Facebook is losing money. No, it is not. Facebook is always making money. And most of the stocks that are in the stock market are always making money. Because if you don't make money, you collapse. And the investors, they see that you're not making enough money, or they begin to sell shares and the stock will be going down, as it happened to General Electric before. I have explained that. Whenever people they think that a company is not doing well, they begin to sell their shares and the stock will be going down until it goes maybe to bankruptcy. So understand that gap ups and gap downs are the effect of the reaction of the traders to the news. The news comes, the traders, they take a decision, either going up or going down. Now you should be the same as these guys. If you are going to do day trading, you should be with the same. You can buy just before the announcement, and if things go well, you can have the gap up. But predicting that there is a gap up or there is a gap down is something that you should never do, because it is based on the news itself. It's not basing on more information before. Because how can you predict? Okay? Does it mean when the stock is going down, you have a gap down? Does it mean then when the stock is going up, you don't have, you always have a gap up? No. And as you see, as I showed you the chart, it's always most of the time the opposite. The trend is going up, you have a gap down, and then you have a gap up, you have another gap up, you have another gap down. So it depends on the news, and you should be careful of this kind of news. If you don't like gap ups or gap downs, do not trade and hold the stock in that moment. Okay? So thank you very much and see you next time.